Hey everyone, this is DayTraderRockStar for DayTradingRadio.com with a market update video going out for the week of August 14th. Comes at a great time. We're going to start off here talking about a little strategy. And as a trader, long-time trader, since 1992, 93, I've seen a lot of things in the market, met a lot of traders out there, and over time you really start to see characteristics of traders, characteristics of the market, what the market is, what the market does, how it plays a psychological, big psychological part in your development, as a trader. And trading's like, I guess you could actually, it's a big, strategic game. It's like chess, and it takes some strategy and stuff. When the markets are good and trending, a lot of people just like to ride that trend. We have indicators that kind of help us recognize important levels, oversold, overbought. We have averages, we have trends, we have channels and patterns to play out, and all these are tools that help us along our journey and try to get the best position in a trade. I like to call the best risk reward scenario in a trade. So that works great until it doesn't work. And what makes that not work? It's the introduction of outside news, things that break down and shock the market. And when the market gets shocked like this, it tends to fall out of these patterns, and it's very hard to guess or predict where these levels are going to end up. And doing that, you set yourself up to, you're actually fighting the market. You're trying to guess. You're guessing with other people. You're trying to capture, your beliefs and your methods. But lots of times, because of the extreme volatility and the volume, a lot of these methods just get kind of crushed and pushed to the side, and the market needs to get back into a rhythm. And there's an important quote that Sun Tzu, which was a great, I would say a strategist, a general, a master of warfare and strategy, and he put out the Art of War. And of course everyone knows that book, and there's a lot of references to trading through that, in a lot of ways that you could apply different things to trading. And one of the things is being able to trade in a market that is one of the quotes here, it says there are roads which must not be followed, armies which must not be attacked, towns which must not be besieged, positions which must not be contested, commands of sovereign which must not be obeyed. All right, and basically this is telling us how to have patience in the market. Meaning that, there's a time to fight your battle, time to use your strategies, and there's time when that won't work against it. It's better to have patience in the market and let things clear up. That's a smart person who is able to do that, to get that kind of discipline. And that's probably the hardest thing as a trader to do, for myself too, because past the fact, you got a breakdown here, you think it's an opportunity, so you force yourself to take positions in the market, and then the opportunity plays out to either side. It's still a gamble at this point. It's no longer in a rhythm. You've broken down. There's no support here, even though there is a little support that you might find on different patterns and different chart time periods. But overall, the volume and the volatility becomes so intense that lots of positions are just taken out just because the ranges are taken out and there's just no clear direction or rhythm or alignment to the market. And sometimes news is just catapulted onto the market to flush it out, and it's just a very, very difficult time to trade. And we approached that time now. We're in that time now. Even though we had a 3 days of consolidation, the last 3 days we've had market swings of like 500 points, which is I can't think of a 3-day period where we had swings of like 500 points in the Dow. You can see on the S&P here the smack down, the reversals, the move up, the move downs. Going into Friday where we actually consolidated. Stochastics are kind of flattening out, but possibly in a bullish scenario where we could push up. And the market actually got aggressively sold off. So a lot of people are coming out now calling bottoms. A lot of people are saying that we should be heading lower. I feel, it's very hard to guess, predict where the markets are going to go at this point. But what I do know that is different from what we were used to trading. The indicators are not setting up properly. There's a lot of volatility, and that's just telling me, and try to instill by even doing these videos, is to step back a little, step back from the market, take some risk off the table, and let things come back to an area where you feel more comfortable. And this is the truth. It might sound like, hey, this is a boring video and stuff, but the truth is, you want to do this for a long time. You want to be successful at what you do, and you have to recognize, the mistakes you make in the past, and remember those. You remember, like, all right, anybody could trade this market right now. There's great opportunities, but is the risk higher now? Yes, it is. Is the the chances of the being shaken out in different positions there? Absolutely. So the risk brings bigger opportunities, but also brings bigger risk. Basically, risk brings bigger opportunities, bigger chance of failure too. So that's pretty much the main point of this video right now, is because we do have conflicting patterns on the S&P right now. We came out of a head and shoulders formation, dropped right off. If we zoom out, you could actually see there's pretty much a dual trend line. We could actually move this one up a little and connect these two lines. It's a better trend line under here, just like here, right here. And we pretty much closed right on that, even though we flushed under it, came back above it, kind of holding on to it. But we're not even going to worry about that, because the volatility is still in this market, and whatever this line is, we're not going to count on it to hold or anything. What I'm more concerned about is momentum and feeling the psychology of the market. When people feel that this is an opportunity, a lot of people are calling a bottom here, 1100 area, and it could be. We won't know that until down the road a bit. One thing I want to refer back to is using the different time frames that I like to use. Starting off with the daily. The daily, possibly a positive setup here. We could easily, anytime you get a smackdown sell-off, usually get a violent reaction back up. So this reactionary trade back up, this bounce, could bring us right up to the 20. Could actually bring us back up to the 200. We don't know where it's going to go. We start to get some momentum in a bid or some good news. We could get a nice violent bounce here, and then the trade continues on. And that's what the market's about. The market has no time frame. Individual traders have a time frame. They're sitting on the cash, and they're waiting for the opportunity to come along. And if the market shows an opportunity and they feel they're losing it, they're going to jump in. And so it's it's a difficult area right now, because if we do get a continued rally, is this just a snapback rally, and there's going to be more downside after this? Very possibly. Or do we actually kind of consolidate in this area and actually retest 1100 area one more time before we decide which way we're going to go out of this? And that's where I think we're going to do. If we go back to the weekly chart, you can see that the weekly chart, we broke out of the major channel, upward channel, which we had a great bounce, and we actually looked at this level, and it was a good level to buy into. Technically, the stochastics, which I use on the weekly chart, which you don't look at often, but I like to look at it when they get into an oversold level, and it's not, and this is going out weekly, so you can see maybe once a year you get an opportunity on the stochastics. You had one back here in 2008, end of 2008, where you had a huge rally. Again, back here in 2010, you got oversold, and we got a nice rally from there. Now we've gotten that oversold bounce right there. That we turned right over, it got very weak, and now the stochastic momentum is pushing back down. So this is telling me, hey, there's a good opportunity here, or a good possibility of continued little weakness, a little consolidation, a little weakness before all is said and done. I really want to get the stochastics to give us that bullish crossover again if we're going to take any long positions. Right now, I think shorts are just as good as longs, as long as you could get a good short position in on this bounce. Not to say, and going into this week is going to be, again, shorts and longs kind of equaled out here, because we could get this bounce, we might not. Things are very unstable. I think we do get a little bounce, but I still think that we're going to probably come back down and test that 1100 level. So things are unsteady right now, and I feel that's it's good enough to say that, just to be more careful. I just did finish the 10 for 1,000 watch list, and that's a set of usually about 10 stocks that are set up to move during the week. And there is a couple good setups off of that. So, there is actually a kick-ass trade and 2 best bets for the week. So if you get to 10 for 1,000 watch list at DayTraderRadio.com, those should act well this week. They should act well. Everything sets up. The oversold indicators, the daily, the weekly stochastics are all set up. So there is actually great opportunities in the market, and we're going to take those. I cannot wait for the stochastics to get back down here and give us another spike up. Things will be looking much better. Right now, going into this week and to next week, still on very shaky grounds. We might see a continued bounce. Might pull back to 1100. Not calling the direction right now. Want to see what happens with the news. The news is going to be headline news is going to really move this market at this point too. There's a lot of things going on here. We got the pre-presidential election year, which is always something that the administration needs to kind of pump the market to get the good vibes on their side going into the election year. Right now, they're behind the 8 ball, and all the Republicans and GOP have the ammo really to take it to them. So you also, I'd like to look at those type of things in the market to see how that happens. And if we're entering a recession or have been in a recession for a while now, and how that's going to play, and is unemployment going to continue to rise, and there's so much out there that hasn't been really worked out yet. Is there going to be another stimulus? We need some jobs. How is that going to play out? All this area could be a tip of an iceberg, very unstable. So going to lighten up, actually lighten the load on the portfolio. Wait probably another week. Wait for the really pure good setups. That's what the watch list focus on, is really quality stocks on good setups, and they're actually starting to show up. Take smaller positions and take faster profits, and life goes on. So hope to see you. Broadcast each and every day. Bring you the setups in the market if there's any good patterns or setups. Technical, S&P futures, everything. On DayTraderRadio.com from 8:30 to 4 o'clock. All the whole market day. So I'll see everyone in the market on Monday. Don't forget to see the futures open up on Sunday night. Just tune in. We got the futures live opening up at 6 o'clock Eastern time, getting a feel where the market's going to head off starting the week off. If there's any over the weekend news.